Welcome to the third episode of the CXO Disruptors series. I'm Sandeep Saujani, the CEO at Kensington. This brand new series is about gaining insight from the leading minds in business who are innovating and disrupting their industries. We shed light on the issues defining the global business agenda to help our communities across finance, HR, and marketing to unlock opportunities and tackle complex challenges. The UK is home to some of the most successful startups and scale-ups, making it a hub for innovation. One fintech is disrupting the mortgage market, making loans more accessible and convenient for consumers. Today, we'll delve into the trends, consumer pain points, and the digitalisation of the UK's mortgage scene. I'm joined by Seb McDermott, the founder and CEO of Koodoo, who work with aggregators, brokers, and lenders to intelligently connect homeowners with their next mortgage. Our second guest today is Vicki Harris, the Chief Commercial Officer at Kensington Mortgages, a leading UK mortgage lender. Thank you very much for both joining us today. It'd be great to start with a little bit about the industry that you both work in. So perhaps we could start with you.
Yes, sure. So I think first thing to say is it's an absolutely enormous industry, and you gave a couple of the statistics there, but there is 1.6 trillion in mortgage loans outstanding today. That's 11 million mortgages. Every year there's 250 billion odd new lending that is made, and the market is dominated by the big six high street banks. So about 75% of lending is in those types of players, and really what has characterized the industry over the last 10 years is, while we've seen rapid digitization in a lot of other industries, and indeed in a lot of other financial products, change has been a little bit slower in the mortgage sector, and it still is an industry characterized by relatively rigid products, relatively offline paper-based processes, and often low levels of customer experience. Now, a lot of that is because of the perfect storm of the financial crisis that brought in place a whole raft of, in many cases, much needed regulation that a lot of the players in the industry had to deal with at a time when exciting new technology was coming into the market. And so while other industries could adopt those, certainly the mortgage sector had other issues to deal with. And so it's been a little bit slower to come into the digital age, but we now are seeing that happening.
And I think, I agree completely with what Seb's saying. I think the other thing that makes this market slightly more complicated and why it's maybe taking longer than some other parts of the financial services industry is just the complexity of getting a mortgage. If you think of the number of players involved, you have an estate agent, you have a broker, you have a lender, you have a solicitor, you have a conveyancer. Getting all those parties on board to come up with a digital solution that works for all of them is pretty hard, actually. And that's why, we still do see some solicitors faxing over documents to lenders. But as Seb said, it is starting to happen, which is pretty exciting.
Fantastic. And Seb, how could you tell us about Koodoo and the mission you're on?
Absolutely. So Koodoo is a mortgage marketplace platform. We connect borrowers with lenders digitally. And really the problem we're trying to solve is that consumers have moved online, whereas historically many of the systems that lenders and brokers use are offline. So concretely what we do is we have a technology that provides a mortgage comparison service to many of the biggest consumer brands in the UK. So the comparison sites like Compare the Market and Confused.com and ClearScore, also media brands like The Times. On there, customers can get matched to the right mortgage for them. We then pull their data from digital data sources, so credit reference agencies, open banking data, and we perform automated valuations of their property. And we have integrations with lender decisioning systems. So when we pass all of that information to lenders, we can get an instant response for customers. So really, we help customers get decisions online so they know how much they can borrow and who will lend to them at the early stage of the journey. We then connect them with one of our broker partners who receives a very well packaged case, and they can focus on delivering great advice. And we send customers directly to lenders, and underwriters receive directly into their systems, again, a fully packaged case that's already been pre-approved.
What do you think are going to be the biggest barriers as we go from here in terms of the digitisation?
I think really it's the point Vicki made around coordinating a very complex industry value chain. So, we spend a lot of time on the digital distribution of mortgages. We can match customers very effectively to products online. We then need to work very closely with our broker partners to ensure that we're qualifying cases effectively for them, also with lenders to integrate our systems with their APIs. And then on the lender side, it's the underwriting, it's the conveyancing, it's the surveying, it's the servicing. This is a very complex value chain, and change takes time when you're trying to coordinate that way.
And I think, to reiterate the point you made earlier, there continues to be a lot of new regulation coming in, and a lot of lenders, budgets for change are necessarily have to be spent on a lot of the new regulations. So it sort of slightly slows it down, but I do think it's accelerated now relative to maybe 4 or 5 years ago.
And from the lender perspective, what's the toughest part for you?
Yeah, so Kensington is we're the largest non-bank mortgage lender in the country. We focus on what people tend to call specialist mortgages. That's mortgages for people who can't get a loan from the high street. Mainly in our case, that will be because there's something about their income profile that's slightly complicated. So they're maybe not in a permanent role where they pay a set amount of PAYE every month. They're perhaps self-employed, so they have fluctuating income each month, or they might have 2 or 3 different sources of income. So when you analyse their income, you need to look at data from 2 or 3 different sources, or they may have been out of the country for a while, or their credit file is thin. But for a number of reasons, there's something about their profile which makes them slightly more complicated, and we therefore put in place a bit more of a manual underwriting process to allow us to really dig deeper and understand their individual circumstances. So I think, look, we work very closely with brokers. I think that, for us, there's 2 or 3 main areas that we want to really focus our digitisation efforts on. One is helping brokers access new clients that are particularly suited to some of our products. So using some of the new digital marketing techniques to attract customers who we think are the right type of customers for what we do. I think the second area is once we have, once a broker has made an application to us, and we then go to underwrite that individual borrower, using technology to gather all the information we need for that underwriting. That the type of underwriting we do necessarily requires some manual intervention, and that's the part of the market that we operate in. But that doesn't mean you can't use technology to gather the data for that manual intervention. And I think using things like open banking or electronic ID checks or whatever it might be is really going to make the process simpler, less paper-based, make it much easier for the customer, for the broker, and for us. And then I think the final area is, as we then understand more about what customers need, we can develop more and more products that are sort of suited to individual borrowers. I think at the moment, a lot of the products are one size fits all, and I think we're going to see an era of much more personalised products going forward.
Are there, Seb, as you look out from your perspective, are there certain parts of the market that are easier to digitise in terms of product?
Absolutely, and I think one of the challenges in the industry is partly because mortgages are a complex product, partly because of regulation. There's been a bit of a one-size-fits-all to distribution, to underwriting techniques, when in fact a remortgager that is putting in place their 3rd remortgage over a 25-year period, and a first-time buyer are going to have completely different needs. And for us, really, it's about building technology that can suit those needs. So a remortgager, for example, might want to do it fully online. They also might not need advice. A first-time buyer will probably want a lot of hand-holding either with a broker or with a lender. And we see our job in that case as making sure that we use technology to take away as much of the low-value work for humans to do, filtering product details to doing the maths around what's the best price product for you, pulling digital data sources so that the broker or underwriter can focus their time on providing advice, really digging into life circumstances to making sure it's the right option for the customer, and indeed for underwriters on really going into the kind of finer details of the case to avoid any kind of computer says no situations. And that's something that somebody like a Kensington does extremely well. And there's almost this kind of paradox around, introducing more technology helps you spend more human time on the things that matter. And when we started working together in mortgages and kind of technology, 5 or so years ago, there was this real, you're either using technology or you're, using human, and actually it's completely not the case. It's a hybrid approach applied in the right way that is what's going to win.
How do you go about taking a sophisticated approach to differentiating applications? Yeah, so we spend a lot of time trying to understand the individual borrower circumstances. So I think the high street, which makes up sort of 70-75% of the market, is they have great products, but they are very much targeted at people who are in sort of permanent roles. Their income profile, if you like, is relatively simple. What we look at is the other 25% whose situations are slightly more complex. They might be self-employed, so they have a fluctuating earnings each month, or they might have been abroad and they haven't got a detailed credit history in this country. So for whatever reason, we need some more detail in order to be able to underwrite them. And what that also allows, though, is that there is more opportunity to create products that meet the needs of those people, because those people, if you like, have more complicated needs. So I think as we digitize a lot more of the data gathering, we are going to be able to develop a lot more products that are targeted to smaller segments of the market, rather than this one-size-fits-all approach, which actually works quite well for a very large part of the market, but there is this also quite big, but a minority part of the market that needs something a bit more granular. What's the data telling you from the tech that you've been using to try to disrupt and improve the processes in the market?
Sure. So I mean, if I just cover what we do, so we're a marketplace platform for mortgages. What we've seen over the last 10 years is consumers have moved online. So that is where they shop for everything, including financial products. But a lot of the systems and processes that lenders and brokers use are still offline. And we bridge that gap. We use our technology and our data to bridge that gap. We power most of the comparison sites and a lot of the big media sites in the UK. We power their mortgage categories. So Compare the Market, Confused.com, ClearScore, The Times. If you're searching for a mortgage on there, our technology is pulling products every day, is filtering them for you and making sure you're getting shown the right products based on your requirements. So I think the first thing to say is we have seen massive growth in the online channel for mortgages, and in terms of what customers are looking to do. Back to the earlier point, that there is no one size fits all. Some customers want to spend all their time speaking with somebody, and that's where we work very closely with broker partners to get that customer to the broker as soon as possible. Some customers want to do it all digitally, either because their case is so simple that it's going to take a matter of 5 clicks. We see that in a lot of the remortgage market, or because they just don't want to speak to somebody. Some people are very happy to fill out a whole application online, hit submit, get a response, and that's the way they prefer to transact. So our data is really telling us that customers are moving online and there's no one size fits all. I think the other really interesting thing that we saw through COVID was customer willingness to connect with digital data sources. So open banking, for instance, has seen a 150% increase in adoption over the last 12 months. Now, part of that is to do with the maturity of open banking, which is only 3 years or so old. But a lot of it is to do with customers' confidence in using online financial tools. We are now seeing customers very, very happy to connect their data if they know that it's going to help them get more confidence earlier in the journey about who will lend to them, how much they can borrow. If they know it'll save them time and in some cases cost.
From the customer's perspective, I think there are more than 5,000 mortgage products out there, and how on earth as a customer can you filter through that, know what the benefits of each are, and even if you know exactly what type of loan you need, how are you going to find the one that is best priced for you? So I think some of the work that Seb's team does is helping you filter that is just hugely valuable. And then I think the other thing that's the other real frustration that we hear from consumers is once you've put in your application and you've got your offer and you're then waiting to complete on your house, you're in this sort of no man's land. No one controls the process. You've got surveyors, you've got lenders, you've got the land registry, you've got the broker, you've got the estate agent. Everyone's involved in this process, but no one entity is driving it. And the customer who desperately wants to know where are they in the process because they want to try and work out what's going on and is this going to happen, has so little control over where are you at in the process and who needs to do what. And I think that technology is really going to help with that, put it back in the control of the customer so that it will take hopefully a lot of the stress away from moving house, which I think is one of the biggest challenges that customers face today.
Help us to understand what the customer pain points are, which is ultimately what I think you're both committed to trying to solve.
So I think the pain points are, there's a huge number of mortgages out there, understanding which ones are right for you. Do you need something that, for example, maybe has a higher deposit and a lower monthly rate? Do you want something that is fixed for 2 years or for 5 years or for 20 years? Do you want something that has more flexibility, but you pay it in order perhaps to move to another lender at some point, but you might have to pay a bit more for that option. So understanding all the different nuances of what is right given your specific circumstances is really complicated. And then I think the other really difficult area is just as I think Seb alluded to before, it's a very paper-based process still today, and customers get asked for information, and if it's not exactly the information that the underwriter needed to underwrite their position, they'll get asked for another piece of paper, and that might still not be quite right, and they go round in this loop, and it just takes a long time to get to the point where the customer feels that they've got the offer for a mortgage that they really need.
And from all of those different aspects, do you have a stack rank for them in terms of significant pain versus less pain? How do you think about the parts of the market that really, really need solving first?
So I think it varies on the customer. I think if you're a relatively simple case, actually across that whole journey, it can be it's simpler across the whole journey. I think if you're complicated, or if your situation is for whatever reason a bit more complicated, then there are different bits that you will find more difficult. So you might actually know exactly which mortgage you want, but then securing it and the underwriting process might be difficult for you. If you don't know at all what mortgage you want, you don't understand anything about how the mortgage industry works, then it might be that bit up front trying to define what are the characteristics or the criteria that you want within your mortgage that you need in order to meet your needs. So I think it's very dependent on individual borrowers as to what's the biggest pain point, but I do think most people, if you would ask them, would say there is at least one pain point along the journey for them. It's certainly not a process that has been optimized for anyone yet.
How do you think about the customer pain points?
So I 100% echo all of the ones that Vicki highlighted. I mean, we are a B2B business, and when I think of the pain points that we're addressing, a lot of our partners are digital communities or brands, and fundamentally they struggle to offer the same experience in mortgages as they do maybe in insurance or cards or loans, where they can match a customer to a product where they know they can get that product, they can do the application digitally in their own time, and the stated rate is what they're actually going to get. and up until quite recently, whereas you could do all of that in cards, loans, insurance, mortgages might be a sort of best buy table that was a week out of date and a phone number. So we are really helping digital brands, consumer sites solve that problem. And then on the lender side, lenders are seeing increasingly complex cases coming through from customers that have particular needs, given where the housing market is, given the year or the 18 months that we've just had. They know that there are a wealth of digital data sources they can use to improve their lending decisions, but it's very hard for them to access those because a lot of their infrastructure has been built for an offline paper-based world. So we provide lenders with that technology to be able to harness the data.
How important is collaboration across the industry in trying to solve some of these pain points, given the complexity that you've talked about, particularly with ongoing regulation being reviewed?
I mean, I think it's vital. I think there's, we need some standards across the industry. It's very difficult to digitise when you haven't got standards, definitions of what certain parts of the functionality of a mortgage. Everybody's defining it differently. It really, then trying to digitise that makes it really, really hard. Secondly, all the different players are at different stages of development with their IT systems, and in an ideal world, everybody would be open to accepting API requests until the industry is much further along the line on that. All the different players, whether it's a big high street bank or a small local solicitor, until we've got that, I think it's going to be hard. But we are making progress. It is moving forwards. I don't know what your thoughts are on that.
I mean, it's vital. And as with any innovation, it's striking the right balance between, spending the kind of 20 years that it might take to get the entire industry to move at the same time, and finding the right kind of pocket in the industry, whether it's a smaller group of players or a particular product set where you can get almost a proof of concept going. We've done some terrific work together already, and there's lots of different innovations happening in the industry. But ultimately, collaboration and coordination is going to be vital to change on a big scale.
I think we'd love to hear about your vision for the future of the market. Let's fast forward 10 years. What does it look like ideally for both of you? Perhaps we start with you, Vicki.
So 10 years from now, someone walking down the street is thinking of moving home, wants to get a mortgage, has a better understanding of what the different mortgage types are, albeit they might not know the details of the one that's exactly right for them. They can go to some online site, don't know exactly what that would be. From there, they can filter from all the different mortgage offerings to get to a smaller group that they think is right for them. They can then, that information then gets seamlessly transferred into an advisor of some sort, a broker, who can give them a bit more detail and advise them that, yes, that is the right one, or no, that's not the right one, or how about you have that one and add these bells and whistles. All that information is then seamlessly transferred into the lender for that particular product, who can then seamlessly underwrite it and give an answer, if not immediately, sort of within 24 hours, as to whether that customer is eligible for that product. And if the customer wants to accept that, they can make an offer online, which the customer can then accept or reject, and it moves forward from there. I do think there was something as big as a mortgage and as important as a mortgage, there will be some customers who do not want to sort of accept it there and then. They're going to want to think about it. And I do think the industry needs to think about, how do we make sure that people don't just accept things without having really understood what it means, because a mortgage is probably the biggest financial transaction that you'll ever make. But something that makes the process much, much easier, much faster, and much more, much simpler is the way it's going to go.
An exciting vision. Seb, how would you add anything to that?
No, I 100% echo that. I would always go back to the different customer groups and this idea that no one size fits all. So I think for a remortgager or somebody who's kind of experienced in this world, the idea of a one-click mortgage is exactly where we will get to. Go online, connect your data, receive offers, select one, done. For a first-time buyer, for instance, it'll be a lot more a case of go online, connect your data, receive offers, speak to somebody about it, select one with them, and then done. But as Vicki says, the key, ultimately this is about putting the customer back in control. And the key innovations that we're going to see is digital channels, connected data, and instant decisioning from lenders.
Thanks very much for listening to today's episode, and look forward to seeing you next time on the CXO Disruptor series.